Hey traders, Mike Sir here. Hope you guys are having an awesome Sunday so far, and we are reaching the end of July, and August should be an interesting time period. Most people, including myself, which I'll talk about later, will be taking some time off. So hope you guys are enjoying the summer so far. All right, today we are going to talk about the investor mindset. And for those who have missed my last two live streams, the first live stream I talked about in this series is the day trader mindset. Okay, what's the type of mindset that you should approach when you are day trading every day? The second series is where I talked about the swing trader mindset, very different in some regards to the day trader mindset, where you're essentially holding positions for longer than one day. So, what's the mindset in regards to swing trading? Now, today we are going to talk about something totally different, is the investor mindset. So, if you are an investor, if you are looking to see, well, what's the approach that I should take for someone who is have an investor mindset. We're going to talk about that today. So let's get started here. All right, just again, normal disclaimer, please consult your financial advisor before making financial decisions. All right, let's get started here. All right, so I'm going to talk about the approach that someone should take when you are an investor. And again, very, very different mindset compared to day trading, swing trading, or even just as a trader or active trader in general. So the most important thing, obviously, is because you are an investor, you want to ask questions like, what's the long-term potential of this investment that you are getting involved in? So let me give you an example. Let's just say that you are buying a business. You're buying property, a real estate property. You're not just going to look at the price and look at the trends and determine your decision, right? As an investor, that type of mindset is for traders. So if you are buying a business, you're not just going to look at the trend. You're going to get involved in the business. You're going to look at the financials. You're looking at the prospects of the business. You're looking to see how it's being run. You're looking to see if it's profitable. For real estate, same thing. You want to look at the condition of the house that you're buying, the condo. You want to look at the condo minutes. You want to have an inspection. So you're digging in deeper, and it's the same thing for whatever asset. Could be a company stock, could be ETFs, could be currencies. Whatever that you are investing in, you should look to see what is the long-term potential. Because if you think that, hey, the long-term potential of this is not going to be, it's not that attractive, then obviously you won't get into the investment. But if you can look at a little bit of a longer time horizon, and you think that, oh, you know what, this is the trend. This is where I think the whole industry, the sector, and we're still in the early stages of this particular asset that you are investing in. So let's just say, for example, we heard a lot about the hype about AI. We heard a lot about the hype in terms of blockchain. We heard the hype about EVs, all that type of stuff. And if you believe in the long-term potential of this, you should invest. Don't worry about where the market is at right now, or whether the market's very, very hot. If you see a long-term potential in this particular asset and it's going to rise in value, you should invest. Okay, so that's the first question that you should ask yourself. Now, the second thing, obviously, as I kind of discussed, is, well, what are the fundamentals? Okay, so let's just say that you love the electric vehicle, the EV space, and you think that that's where everything is going, which is true, right? Everything is heading towards removing gas emissions from the world, and moving more towards clean energy. So look at what's the company fundamentals. Which is this company solid? Does it have enough money to be able to survive? Is it in a very speculative situation? Is it generating cash flow? What are the assets? What? Not just looking at the potential, it has to survive, right? You're looking under the hood of this company, not just of the potential, but of the current financial situation of the company. Can it survive? Does it have a strong enough investment? Who's backing it? What are the prospects? Is it developing new revenue streams? Is it have strong partnerships with other companies that it will be able to survive for the long term? So those are the questions that you need to ask. And maybe if you think of it from a longer term perspective, is you might not want to invest in a more speculative EV company. Maybe 5 years ago Tesla wasn't a good investment because it's a very speculative investment or very, very speculative type of trade, versus now where it is the leader in the sector, and therefore you can see the long-term prospects of it. So look at the company's fundamentals, and versus just looking, as I said earlier, in terms of the trends, in terms of the charts, in terms of the catalysts. Think, is this company going to survive? If you feel confident, then look to invest. Third thing, as I said already, will the company go bankrupt, right? If you feel that the company is just not on solid financial footing, if you see negative cash flow, if you see that it's going to run out of funding, if you see something that is a very speculative industry, then it's not a good investment, right? So the mentality, the mindset investing, it's not of a very speculative nature. It's more of if you're looking for the long run, okay, long term, you want something safe. You want something solid. You want something that you can sleep at night and not worry that the company or the sector or that particular asset will decline a lot in value. Okay, so investing, it's not about trading in a sense that you're looking for a huge return. That's not the mindset. The mindset is you're looking for something that will give you solid, stable returns over the long run. Now you're okay with the fluctuations, but you're not okay with the fact that this investment would fluctuate up and down like 50%, right? Goes down 50%, goes up 50%. That's not the investing mindset that you should have. Those are more trading mindset. Next thing, did I do my proper research and analysis? Okay, goes back to the mindset of, if you are investing in something, don't just look at the price, don't look at the charts, don't just look at those short-term scenarios. Don't just look at it or spend very, very short or very little time on that particular type of opportunity. If you are, again, you're not looking to trade in and out of this. You're looking for a longer term. So the mindset has to be, did I do enough due diligence? If I'm going to buy this business, did I look under the hood? Did I look at the financials? Did I talk to the competition? Did I talk to the employees? You do a lot of research and due diligence before you invest. And that's the same approach that you should have investing in stocks, currencies, commodities, anything that you are looking at holding for the longer term. Next thing, am I affected by the daily volatility? Well, who cares? As an investor, who cares if the markets, go down sharply or go up, like the daily volatility, because you're looking at from the long term. As long as you can see that the asset that you invested, going on looking at a chart, looking at a longer term chart, that the price is going in one direction, which is up. Okay, from the left to the right. Is it going up from the left to the right? If it is, then it's a good investment, right? If your investment going from left to right is going down, okay, you can see very, very clearly, then obviously it's not a good investment. However, another way you can think of it is, as I will talk about in some of the next questions, is if it's going down, you want to buy it as low as possible, right? As an investment, because you want to, you're not looking to trade this. Okay, well, again, I'll talk about that. Next thing, as an investment, is it paying me while I wait? The types of investments that I like, and again, not talk about trading, okay, short-term trading or even mid-term trading, where I'm buying and then getting out, within a year, for example. If I'm holding something longer than a year, I ask myself, is this investment paying me while I wait for the price to continue going up, stop going down and start going up, right? Or just going sideways, right? If it's not moving up in the value of my investment is not going up, let's just say over a longer period of time, and it's not paying me for it. Okay, what I mean by paying me is not giving me a dividend, it's not giving me a monthly distribution, it's not giving me a yield. Well, why do I want to hold on to this investment if it's not going up in my favor? Even if it's not steadily going up, right? Or even if the investment is going down, I don't mind holding on to it longer term as long as it's paying me. Like if a company has very, very good positive cash flow, which they can give distributions to shareholders. If the cash flow is good, the financial situation is good, but the share price is still going down, I still don't mind holding on to it, right? Because I know the company will survive. So I'm willing to overlook the drops, the fluctuations of this particular investment as long as it's paying me, right? Every quarter or every month or even every year, as long as it's paying me something to keep me invested, then and it's a solid asset that I'm investing in, and I did all my due diligence, why would I not continue to hold it? Okay. Next thing, is there fear or greed? And this is where I was talking about being a contrarian. It's where if there's lots of fear in the market, as an investor, I'm looking for undervalued. I'm looking for overreactions. I'm looking for scenarios where I can buy an asset for $1, which is actually worth on paper or book value $10. I take that investment anytime. Okay, even if the price is going down rapidly. Obviously, you want to know why, but if you did your due diligence, if you know that this asset is worth $10 and you can buy it for $1 right now, take that trade, right? Or take that investment. When there's fear in the markets, that's where you as an investor come in. And this is exactly where some of the wealthiest people in the world have made a lot of money, is in stock market crashes. Again, look no further than 2020 March, right? When the market collapsed. Lots of wealthy investors swooped in. That was the turning point. Look at the amount of people who swooped in during the financial crisis in 2008, 2000 to almost 2011, during that period of time. Now, obviously, some investors got in a little earlier when the markets first started dropping, but they continued to hold that asset. And those people who continue to hold those assets over a longer period of time, they actually end up making money. So yes, they got in a little bit too early, but this is what they look for. They look for fear in the markets. Now, if you, as an investor, sometimes you do have to take profits, right? I mean, sure, you are longer term, but longer term, if you don't take any profits, even at extreme levels, then you don't make money as an investment, right? So this is where you, as an investment, where it gets to such extreme levels, where the asset that you are holding is worth $10, but on paper, it's only worth $5, for example. This is a scenario where your mind says, hey, the market is too crazy. There's too much greed. There's too much money chasing these type of investments. This is when I sell. Okay, because if you look at it from an overvaluation, right, where valuation is getting too crazy. Now, but for trading, it's fine. Buy when it's overvalued, keep buying as long as it keeps going up. But as an investment or as an investor, this is where investors start to offload their investments, right? It's just like, for example, if you were a homeowner, or you were holding on to investment property last year or the year before the Fed really raised interest rates, that was a great time for you to sell real estate, right? To get your real estate that is worth so in high demand, so much people trying to speculate on real estate or speculate in solid assets, that you as an investor would look to sell into the greed. Okay. Next thing, another consideration for you to decide when you should sell assets is, has the fundamentals changed? And that's also your cue to sell your investments. Because if it gets to a situation where the company that you're holding suddenly did a whole restructuring, maybe fired the CEO, maybe start restructuring the management team, maybe stop offering new products, something that is fundamental change, and that obviously causes the value to go lower, then that is a trigger for you to sell your investment. Okay, not just selling when into the hype and to the greed, but selling when the fundamentals change. So again, a perfect example is if you buy a business, it's doing well, but suddenly because of change in consumer behavior, that not as many people are buying that same product or service that you're offering, then it's time to sell your business. Next thing, right? When do I sell my investment? As I mentioned, again, whether it reaches a point where you sell into the hype, right? When the valuation gets too crazy or overvalued, or when there is detrimental change to the fundamentals. And then lastly, in any type of, whether you're a trader or investor, is how could I have done better? Okay. Investment, or as an investor, you don't have to worry too much about timing. You're just trying to catch along the trend. Okay. Trends going up. Markets have really rallied off the bottom. You're not trying to capture at the bottom. You're not trying to sell at the top. You're just trying to make an investment that will go up in value over the longer term, as long as it goes from left to right, going from down to up. All right. Let me know if you guys have any questions for me in terms of the investment mindset or investor mindset, or any questions that you might have for me. Please type them in the question box below. All right. Okay. So I got a question from Richard. Is, how do you determine win rate of a strategy? Is it based on week, month, or yearly compilation of result? Okay. So good question, Richard. Well, it depends, kind of similar to what I mentioned in this series about this mindset. Are you day trading? Are you swing trading? Are you investing? Right? What are you looking at, the ratios of how good you are in terms of day trading, right? Not talking about the rate of return overall in your portfolio. in terms of the style that you are trading, in terms of the asset that you are trading, in terms of the market that you are trading. Like there's a lot of factors, right? In terms of how you would determine, well, what's my win ratio in terms of the time period, right? Obviously, if you are day trading, you want to look at your win ratio comparably on a day-to-day basis over, let's just say, a week's period of time. And then you obviously assess it over a month, but there's no need to assess it even further. It's more of, are you consistent on a weekly basis, right? What's your win-loss ratio? And it sometimes may vary, because I've seen, day traders, and also including myself, where I mentioned this before, where I had 100% win rate for day trading in one particular month, and I remember this very clearly. I was on the road. Everything that I was trading in terms of my trading strategy was working really, really well. Now, obviously, I love to be able to do it month after month, but it was only that one particular month where I had 100% win rate. Of course, it's not sustainable. So what I would say that is, if you are at least able to maintain, sometimes, again, depending on your risk reward ratios and all that stuff, but if you are able to maintain above 50%, that is extremely good. But no need to target anything above 50%. Okay. Yeah. Thank you very much, Richard. Richard says awesome live stream. Yeah. As I said, love sharing lots of things with you, and this is the reason why I have these live streams. And again, thank you, Richard, for always your support. All right. If there are no questions, I want to let you guys know that there is no more live streams in August. Okay. So next month, I am going on vacation. I'm going to take some much needed time off, or well-deserved time off, if you can say that. I'm going to spend a lot of time outdoors. I'm actually not going to be traveling like outside of the country, but what I'm going to be doing is just going a lot of hiking, going a lot of mountains, going to just basically enjoy the rest of the summer here in Canada. So let you guys know. So there will be no live streams in the month of August. But make sure you guys come back in September, because there's going to be a new format in terms of these live streams. I've been working behind the scenes on how can I continue to provide lots of value to you guys, who attend my live streams on a weekly basis. How can I help you guys with the mindset, the psychology? How can I help you with my 23, 24 years of trading experience? How can I help you navigate the biggest obstacle in terms of trading, which is yourself? So feel free to reach out to me, like any type of topics that you guys want me to cover in September, in the fall. I'm always open. Again, I'm here to help you guys improve that trader mindset, that you can make consistent and big profits in the markets. All right, guys, thank you so much for spending the Sunday with me. I hope you guys enjoy the rest of your summer, and I will speak to you guys in the fall, in September. I will still have my videos that I'll be releasing, so there's no live streams, but make sure that you check also my YouTube shorts. Produce a lot of YouTube shorts lately, as well as videos for you guys. All right, guys, take care, everyone. See you in September.